Hello everybody, welcome to another update on the Gold Forecaster Index, the holy grail to predict gold prices. So in the last video I said that gold was losing its shine, and as you can see gold is now at 1790, which means gold has done nothing. Went a little bit up and now it's back to 1790. So let's see if something has changed in the last month. Our Gold Forecaster Index, which uses leading indicators to predict the gold price, has a new data point, and the data point is pointing up. See that? So gold is starting to look better now, and we will see why it is now looking better. So we are going to keep our gold stocks. They will do well. We are still in positive territory. I don't think they will crash or anything like that. So this will slowly start moving higher. This is the same as last time. Misery index is still pointing up. Real output is pointing higher, but this blue line still needs to go positive. So we can see that CPI is rising. Gold demand at institutionals still doing nothing. Still no demand from institutions. China gold demand was up, and India gold demand was also up. So that's a good sign. SLV has done nothing. The China silver warehouses, you can see that the amount of silver stock has risen. So there is some demand coming in from China for silver. This is an interesting chart. The registered silver has dropped a lot. So what we are going to see here happen is that once the registered silver goes back to this level here, then we will see a bottom. So we're still not there yet. We will still need to see this drop more until we can buy the dip. So I wouldn't buy too much silver at this moment. Central banks have been buying gold. So India bought some, Kazakhstan, Uzbekistan, Singapore, and Brazil. So there's healthy central bank gold demand, but it's not that much. 1% or something like that. US mint sales were at 0 because they shut it down. You can't buy any silver eagles at the US mint. Premiums have been hovering around the same levels. PSLV premiums have cratered, so it's not a good time to buy silver right now. I'll just show you that. Look at these premiums. They are cratering. It's now minus 3.7. So the interest in silver is really going down. Nobody wants to buy it. As you can see here, positive premiums. Typically, the silver price will rise, and now nobody wants it. So we need to see this turn around first. The COT reports look stable. Nothing to see here. Gold COT report is also stable. The open interest has come down a bit, but we need to see that bottom out more. Silver is in a buy zone right now with net silver swaps to the long side and quite a bit of shortness, so we could see a small squeeze. But I'm not too keen on buying silver right now, even though COT reports are pretty positive. Lease rates. Yeah, lease rates, this was a good sign, but now it's dropped again. The red line has dropped. That's not a good sign. And silver is also dropping. So yeah, this is not good. So I would wait a bit. Swiss franc also dropping, not a good sign. Tips rates pretty stable. So gold is hovering here between those two lines. Nothing to see. Real yields have been doing well, but gold is not performing. It should move higher because of negative real yields, but we're not seeing it. Okay, so we are now in January, and gold should do well for at least 1 month, and then you should get out somewhere here, because February and March are really not good for gold. Silver, it's a bit better, but again, in February and March, you should get out. So I wouldn't buy it right now. Maybe wait until April to get back in. Charles Nene still says we are in a bull market for gold. And the miners sentiment is stable. Probably more upside than downside. Currency in circulation is not going up that fast anymore. So you are going to see stable markets. So stocks and gold will probably go up, but at a much slower pace. Let's take a look at some indicators. So the leading indicator is slightly negative, and the weekly economic index is pointing a bit up. So yeah, we get stable markets right now. It's a stock picking market. Leading indicator still in the positive, and we're still in non-recessionary territory. Yeah, Danish forecasts are still going up by 10% for this year for stocks. So we should stay in the stock market. And here you can see that, so these are the Treasury yields, and you can see that they tend to converge. And once they converge, then a recession starts. Okay, we have seen that here and here and in 2018 as well. So now in 2022, we are starting to converge, okay? Probably to the 1.7 level, and then rate hikes will start as well. And at some point they will have converged, and then a recession will start. So we are not there yet. We still have time to stay in the stock market. The money supply is going up, but not that fast. So we're still in inflation. and that should be good for gold and stocks. Also, lending is increasing. Lending is increasing actually a lot. You can see this cup formation, so banks will be doing well, and probably also interest rates will rise because loans are rising. So banks are good, and that's also why I don't like gold at this moment, because this is a sign of growth, and gold doesn't like growth. Also, when we have growth, then we will see tapering. So the Fed is still going to start tapering. And as you see, the loan growth is going up, which means we are going to see this blue line go back down, which is tapering. So you can actually even see it a tiny bit. So this blue line is actually going down slightly. So that's the tapering that is happening, and we will see this go to zero here in the coming months, as Powell says that he will stop doing QE and then start hiking rates. And yesterday he also said that he would hike sooner. And that's why stocks were falling, as well as gold. Central bank balance sheets. So Europe is not printing that much money anymore. This is the Fed balance sheet will also start tapering, and Japan is already tapering. And let's take a look at the wallet of Janet Yellen. Still not a lot of money in the wallet here. So I expect that a lot of debt will be taken on in the coming months, because there's not a lot of cash here in the treasury. And that could also push up bond yields. Then let's take a look at what the stock market will do. So these are the high yield bonds, are pretty stable. So I don't expect stocks to crash, just some corrections here, and then we will rise a bit. We have a very stable market. Same here, credit spreads. This is actually very stable. It's not crashing. Then on to the deficits. Budget deficit still in the negative. And the latest trade deficit for the goods is a new record high here. Services were a bit better, but in total, we have actually a record deficit. Okay, so that's good for gold, bad for the dollar. And this is very concerning. Import prices are very high. So the US is importing a lot, but not exporting. So that's why we have a massive deficit. And this will be very bad for the dollar. Capacity utilization is rising, so that's inflationary. But we will need to see this go to 80 to see a real spike in inflation. But we are coming there. The trend is up. So don't worry, we do have inflation. Also, you can see this here. Fertilizer prices are rising together with the food prices. So buy Verde Agritech. This is one of the best fertilizer companies in the world. And you can also read the article. I did also create a video on silver miners. And as you can see here, they're all overvalued. And I have been predicting this. Silver miners are completely overvalued, and they have completely underperformed all other assets. So these silver miners have been crashing. Even the best ones have also crashed. So it's the whole sector. If you had bought these silver miners at the top, you would have lost 60%. This is unbelievable. But there is still a lot of downside to come because they are still overvalued. So I see a further 50% crash coming. So do not buy these silver miners, please. And then we have some data on China. So power consumption growth rate is going down. So China is slowing down. That's not a good sign for commodities like copper, silver. So be aware of this. We had the FOMC meeting, and there you can see that the rate hikes are going to get accelerated. So that's a bad sign for commodities as well. Now, what do we do with our money then? So the only asset that I really like is lithium. So the analysts, they think that lithium is going to go down, but some other people think that this will go up. If you read this article, you can see that lithium is going to double this year. So we are at 2,000 right now, and this is going to 5,000. And $40 per kilogram is going to $60 per kilogram for lithium carbonate. So just read this article, and so these analysts all forecasted going down, but actually it will go up. And that's because these analysts have been overestimating supply. So they are overestimating supply. They're not factoring in the recovery levels from the converters, and also delays in new projects. Also, battery yields are not taken into their analysis. So that's why I think that lithium is going to do very well. And it's a very good idea to buy this. Just look at this chart. There has never been one time that the lithium price went down. All are increases. There's no, yeah, only maybe here. Here it went down a tiny bit, but all the other data tells me that lithium is just going to keep on rising. It would probably do something like this, and then it will keep rising. So the contract prices are rising. Okay. Not sure if you can hear this, but so what? So let's listen to this person. So Chamath, our friend here, Chamath says the best performing assets in 2022 will be battery metals, lithium, cobalt, nickel, graphite. So that's what we are going to do. We stay in the lithium trade. You can see here, lithium is having such a good future here. And this year alone, we will see supply maybe go up to here, but the demand will also go up to 641,000 million tons. So I think it's metric tons. But the thing here is that demand is higher than supply. So that means lithium will go up in price. We will see a lot of deficits, projections from Rio Tinto, Savannah Resources. What's this? McKinsey. So everyone is saying, Benchmark Mineral is saying that deficits will be growing and that will be good for prices. So not a lot to invest in 2022. You need to pick your stocks, avoid the silver miners. Gold will not do that well. So there's only one thing, and that's lithium. And I'll see you in the next video.